stars SREESANKAR and DILIP now join us from the sidelines of the Prabhudas Lilladher Small and Mid-Cap Conference that's currently underway in Mumbai. Gentlemen, good afternoon. Thank you for joining us on Closing Bell. If I can start with you first, DILIP, can you sort of describe to us the kind of appetite, continuing appetite for small and mid-cap stocks, given the run-up that we've already seen in those spaces in the past recent months?
Well, Menka, yes, I think the demand continues to be pretty good. The interest seems to be pretty good in all these companies. I think the way the frontline stocks have really moved up, I think everybody is looking for a good value over here. But I think by and large what people are still understanding is that since we are in a multi-year bull run, so I think that is where the mid-caps are the ones which can really do pretty well. So I think that being the case, I think on the same corollary, I think the interest for the mid-cap continues to be pretty good and interesting. And I think we have identified quite a few of them over here, where I think on a long-term basis they can give reasonably very good returns.
Dilip, what have you identified? How have you identified them? Given the fact that when people talk about the Indian investable universe, they say perhaps it's just about 20% of the entire, or 30% of the entire market, if you're being charitable, is really investable. So, how are you? On what basis are you picking these stocks? Because these are high risk, but of course could give you great returns.
Well, you're absolutely right. You know, what had happened was last time round, if you had seen the way the mid-caps had gone up and the way they collapsed, I think a couple of things came out very clearly, that either they did not have the kind of the management bandwidth to really cope up with the scaling up of the turnover and the operations. And of course, the lack of fiscal expertise and discipline, I think all this got compounded. So I think keeping that thing fresh in mind, so we were still trying to select some of those companies where we thought that the management can be trusted for scaling up of operations, where they'll be able to cope up with the change. And second, they'll be able to handle the growth pretty well. And of course, most important is that the company will observe good fiscal discipline, focus on the return on investments, focus on the ROC and on the cash flows. So I think we have kept that in mind and tried to select as many companies within that valuation or within those parameters as possible.
Sri, what's looking most exciting for you from the universe that you've picked up?
Oh, Chantal, let me put it up this way. We like a lot of these companies which are domestic economy focused, as we believe that going into the growth story, it's first the domestic economy which will grow much faster, and because what's happening around the globe, so exports apart from IT probably will become a bit subdued, and it's a domestic story. In the domestic story, we like stocks like Sangvi Movers, then we have got Action Construction, we have got Conf Homes, then we have got Sundaram Finance, we have got plenty of stocks like that. Okay. Also we had a series of companies which probably are niche export companies also. I'm just reeling out some of these companies.
So are you going sector top down, or are you going bottom up in mid cap and small cap free, or is it obvious that in this segment you really need to go bottom up?
See, if you actually look at from a top down approach, you probably like a financial services sector industry per se, because financial service industry is going to be the first beneficiary of a boom in the domestic economy, or for that matter, if the economy booms itself. So now, domestic economy, or rather the financial services sector itself has got its own problems. There are large number of restructured loans, plus NPAs, etc., a combination of it facing the public sector banks. Apart from public sector banks, then you have got the private sector banks, then you have got NBFCs, and also a large number of, or rather a decent size of mid-cap or mid-tier private sector banks, old generation mainly. So you have got a combination of these banks. And what we think is that all of them have got a role to play. Everyone should see a sustained growth story emerging. Some of these banks, especially some of these financial services companies, depending upon their growth, will need more capital infusion, especially the PSU banks will need larger capital infusion by the government, at the pace of which it's a question mark right now. So what we think is, from a top-down approach, yes, we like the financial services, we like the housing finance companies, then we like some of the capital goods players which will benefit. Again, we have to bear in mind that a lot of these capital goods players will benefit at the end of the cycle, or not at the beginning of the cycle, only when the cycle has actually started to move up. So we have got a large number of companies. Within those companies, or within those sectors, what are the things that we like? And that's what we are probably cherry picking at this stage. That exercise still goes on, and as the growth in the domestic economy picks up, it will become more clearer.
Dilip, you can just can talk us through specifics of, say, a Canfin home, because I picked this up as an example of housing finance companies. They are undoubtedly great companies, but all of them selling pretty high. Some of them selling at maybe 4 to 5 times a book.
Well, I think Canfina Homes is not that expensive at the moment. I think the stock price certainly has gone up, but this is a company where you will see a sustainable 30 to 35% growth. We have seen a very proactive management at the top, which is really driving this business. They are also trying to substitute loan against property. You know, they are trying to increase the share of that, so which will increase the overall yield for the companies and the NIMs. I think they will still, what we think is they will show a 30-35% sustainable growth at the bottom line, with an asset quality which is definitely stable, and of course an ROE is around 15-16%, which for a growing company is quite okay. So I think it still has a good scope for it to really go up.
Sri, Sundaram Finance is another company that you're bullish on.
Yeah, again, it's again a typically top-down story, and no questions about the management quality and the kind of a growth prospects that they have. And if we continue to believe the growth continue to happen, or the economy continues to grow, all the segments that they are present will continue to show a faster growth. Then if your question about valuation, essentially if I go back, even in 2007-8, if I look at the 1-year forward multiple of the market was somewhere around 25 times. I am not defending 25 times. The last 10-year 1-year forward multiple average for the market has been somewhere around 15x. So we are already at somewhere around 16.7x 1-year forward. And when the markets have moved up from 5,500 right now to around 8,500 levels, so closer to 8,500 levels, it has been a one-way bull rally. So you will actually see pullbacks. And in the bull rally, you actually see a lot of these valuations expand, or the price earning multiples expand, price to book expand. So it will actually, what we will see is a expansion in both price earning multiples as well as price to book valuations. And it's going to be a function of the market. So I think it's going to remain here, as we believe, and as Dilip has mentioned earlier, you actually expect to go to be a multi-year bull run for the domestic economic growth. And if that's going to come true, the valuation, we think, will become more expensive going forward.
In some of the other spaces or stocks that you seem to like, and I'm looking at some of the stocks, that it does seem are your picks in this space. Sri, can you talk about Mindtree, JK Lakshmi Cement, Britannia Industries, and why these stocks continue to look attractive to you at this point?
Menka, again, those form a part of our top picks for and strategy would we do on a monthly basis. We continue to believe that Britannia as a house, we have been bullish from probably 450 levels. That's done very well. It is probably for 6 months it did not perform very well, but it performed, and it has been on a great road. The new product launches, the kind of advantage that's happening, and the kind of valuation the company is quoting at, plus the way that entire market is opening up, all makes us believe that as a consumption story, Britannia will continue to improve. That's number one. Number two, a lot of those commodities, raw material costs have not been moving up. So you should also actually see an expansion in their margins. Number three, the quarterly result. I think Britannia has been one result which has surprised the investment community and analyst community quite a lot with an expansion of margins. So our analysts and we continue to believe that it's a good story continuing to happen.
Just on the issue of Britannia, Sri, just on the issue of Britannia, are you seeing a pickup in consumption demand as yet? Because the signs are very conflicting. And if not, how sustainable is this ability to expand margins from here on? So, that's the question mark, I suppose, on the stock. Great company, great products, but just curious to know.
Menka, I think the consumption story, are you seeing a consumption demand increase? The answer is no, right now.
Exactly.
It may be more of a status quo. What we expect to see is that if the initiative that has been taken around, and that initiative fructifies into economic growth, it will necessarily need to a consumption demand growth as well. And that's the premise at which we have approached, and that's where we continue to remain bullish. And the questions about JK Lakshmi, Mindtree, etc. Again, JK Lakshmi, if you look at the cement sector itself, the valuation that you pay probably for a new greenfield project is around $110 to $120 per EV per ton. So if you look at the valuations across, starting from Gujarat Ambuja to Ultratech, to many of these companies, the valuations have become stretched. This stock is still below 100. So still we believe there is a lot more scope to go. And on top of it, they have actually gone to a market where you should actually also see the highest margins as well. So all these makes us believe that there is a story, still there is a value to be recovered from that particular stock. Again, Mindtree, the stock has probably become a four-bagger from the way when we have started recommending it. Our analyst still believes that it's a good story because they are focusing on it. The growth is getting delivered, but these stocks probably have not moved up at one go to that 100%, 200%, but it has been a steady move over a period of time. So all these forms of part of our top picks and strategy, and we continue to believe that these are the stories that we like. A combination of mid caps, and some of them are large caps in the financial services like State Bank of India, ICICI Bank, HDFC Bank, etc. I
think Federal Bank is also on your list, Sri?
Yes, that's a mid-cap, one of the mid-cap banks which we continue to like.
Okay. Dilip, I mean, we've been talking about sectors and stocks that you're like, but what about sectors and stocks that don't look very appealing anymore? For instance, in the early part of this rally, we saw a big build-up in several of the mid-sized capital good companies, or industrials, if you want to call it that. In the recent months, we've seen a big run-up in several of the consumer discretionary stocks, the white good companies in the mid-cap space. Are these areas that continue to interest you?
Well, I think the consumer discretionary continues to look pretty interesting because in spite and despite whatever is the economic environment, they have been showing a reasonably good kind of a sales growth. Nothing which is really very good, but still looking at the background of the circumstances, they are still very good. But I think cyclicals are the ones, the metal space is one, which doesn't really appear to be all that great at the moment. I think looking at what is happening in the world, and maybe even in India, it should not be an exception. Overall, I think that is a space which probably will continue to face a lot of competition, and I think that margins will continue to be under pressure.
Okay, a final question then, Dilip. In terms of portfolio allocation, what are some of the investors at your conference saying in terms of continuing funds in these spaces of mid cap and small cap? Is the fund momentum reducing, so to speak, at all, even if there are several bottom-up stories that look very interesting?
I think, Menka, as far as this mid-cap and small space is concerned, I think it has to be a stock-specific case rather than a sectorial approach. Sectorial approach is certainly going to be there, but I think the approach is going to be more, you just cherry-pick quite a few of the stocks and then you play them. Because if you really want to play the sector, then you really have to play the frontline stocks, which is where you can play, whether it's banking or capital goods, you can acquire some of the frontline stocks. But in the mid-cap, I think in a way, to use a word a little sector agnostic, people are going to buy across the sectors and look at the values on a bottom-up basis.
All right, gentlemen, thank you so much for joining us, and thank you for helping our viewers cherry pick some interesting stock ideas that make the top of your list. There you've got it, Dilip Bhatt and SREESANKAR from the Prabhudas Lilladher Small and Mid Cap Ideas Conference.